So you may ask yourself, how do I know what to invest in? You may say to yourself that stocks are an easy success route. There are all kinds of different stocks out there. Penny stocks, there's multinational stocks that aren't from the United States. There are stocks because that corporation are in a different state. That's what creates it to be multinational. And there's multinational stocks because those stocks are actually companies that the US needs for their raw ingredients. Raw ingredients are a part of our life. So you may ask, what are raw ingredients? It wasn't just a computer chip overnight. And that's the thing that people fail to realize. It's generations of human being intellectual thought that goes into creating all kind of different platforms inside of a company that makes it a corporation throughout time. You may want to invest in a stock like PepsiCo. PepsiCo has been around since the 1800s. To be exact, these same sodas
with simple pleasures, places to see, people to love, and PepsiCo is the one cola that belongs
these
with
same
every
sodas
hopeful moment you live. It's the Pepsi Gen.
Multi-branding has been incorporated throughout company.
Going strong, put yourself behind.
It's like buying a new car. It depreciates, but when you buy a used car, it doesn't depreciate unless it has problems and a mechanic and prices and fees for different components of the car. A company is similar. In that analogy, there are many different reasons why components of a stock matter. That being said, invest wisely and put effort into researching different tools that you can identify with as being smart investments and disengaging investments. A lot of companies use corporations to take in and buy and merge. IBM, a blue chip stock, they merge with all different types of computer companies. A company that does multitasking in different functional levels. That creates more of a capitalistic market within multitasking through different channels of distribution. Within that cause, there's a causation of reasonable doubt that stocks will go up when stocks depreciate and rise and always fluctuate in an economy that always goes up and down. Just like money, this is an old $100 bill. As we can see right here, this is where the federal stamp is located. This bill is a $100 Franklin, and as you can see, quite frankly, this bill right here shows the status of where this treasury is located and where and how and when it was printed. Stocks are kind of like companies and when and how it was printed. Well, in a way. IBM started with the Select typewriter. It wasn't just a computer chip overnight. And that's the thing that people fail to realize. It's generations of human being intellectual thought that goes into creating all kind of different platforms inside of a company that makes it a corporation throughout time. Number one, review your money to spend. In other words, review what money you have to use to invest that you don't need inside of a checking account. 2, consider how long you want to invest. Is it going to be 20 days, or is it going to be 3 months, or is it going to be 1 year? That's an investment ratio of time before you're going to sell the stock. You don't want to sell a stock when it's down. In other words, at the market price that you purchased it for, at a less percentage value of the price that you purchased for. Let me see, I purchased the stock at $119. Now, that share of a stock is now purchase price worth of $115.45. If I sold at that time, on paper, it's going to be worth $4.50 something cents less. Not to be exact, but then you're actually losing money. So you want to know when to sell, and when to sell is smart. And if you don't need the money, then technically you don't want to sell at that time. IBM stock closed at $107.95. Well, let's look into the bigger picture. When you look at stocks, you look at a stock graph. It's an analytical chart. When you analyze stock graphs, you look at the numbers from lower to power up. In a way, you can look at stocks in an analytical way to identify if the stock is doing well within the last 6 months, or within the last 3 months, or within the last 10 days. It depends on you. It depends on your time to put in the effort to really look at how the corporation is doing. So here you can see, here's the 6-month ratio at $140 a share. In early November of 2019, it was $142.48. Now, it is $107.95 in March 13th of 2020. The stock market is always changing, and you have to change with it. So remember, how will it? Those are 3 functions that you want to look into. There are many things that you can question, but the outcome is a perceivable unanswered guarantee. And that's the thing. With blue chip stocks, there is a long-term value, and the sense doesn't decrease, decrepitate, or cause an issue. And that's the issue that you want to really say, is this worth it? These blue chip stocks that are involved in the market, they're not going to go anywhere. That's the whole purpose. IBM is in Dell computers and Gateway computers, which isn't even technically around as much. Dell computers is like the biggest known computer source for all type of corporations and business, including law enforcement and including airlines. So let's just go into a factor here. Databases don't want to get encrypted with hackers, and this is a trusted business. Why would IBM be marketable and then tomorrow be gone? So let's say you invested thousands of dollars in IBM and you feel that the stock market's going down. Do you think a blue chip stock will then end up losing you in the long run? That's the question that you have a risk, and that's where risk assessments come into value place.